Let's take a look at this together. If you look at the chart of PEPE, if you look on the I time frame, like the weekly time frame, I can currently identify I can identify a 5 waves Elliot impulsive wave pattern currently forming on the chart, where this first impulse would be the first wave, the second wave being the corrective wave, this larger second impulse being the third wave, and then we got another second corrective wave 4, and it looks like the last and final wave of the 5 waves is currently what we're seeing playing out in the market. So if I can identify this on the I time frame, this 5 wave structure, um, we can look deeper into each of these waves and look at the formations within each of these waves in order to determine if this 5 waves movement is complete already. So if I go on to the daily time frame and I look into the first wave, wave 1, I can clearly see 5 waves here. 1, 2, 3, 4, 5. That means the first wave is valid. The second wave is a corrective wave, so I can see an ABC correction here. A, B, C. That's valid as well. Now into the third wave, I can also spot a first wave 1, 2, 3, 4, 5. That means wave 1 is complete, wave 2 ABC is complete, wave 3 1, 2, 3, 4, 5 complete. Now onto wave 4, which is the second corrective wave. I can also identify an ABC correction here, A, B, and C. Now this is where the price of paper is right now, and it's currently within the fifth and the last wave. So what I'm trying to identify now is the fifth wave and the last impulse wave, the fifth one, is it complete already, or do we still have um, another wave to put in within this wave? So if I'm going to measure, if I'm also going to tag the the wave count within this wave 5, I can identify wave 1, that's going to be the first wave, the corrective one, wave 2, then this larger wave is going to be my wave 3, and then now that would mean that the price of paper is currently in a corrective Elliott corrective wave. As we can see that we only have the first, the second, the third, and the fourth wave currently forming. So that means that we're still left with one final impulse on paper. So if we're looking at it like this, that would mean that we should be looking at this um, wave 4, which is currently forming. So we should be expecting a corrective structure within this wave 4. So if I'm going to try to find out if the correction is finished or not yet, then I'm looking into the fourth wave, and all I can see here is 1A, 2B, and the last wave, which should be the C wave, looks like it's incomplete yet. So I'm just breaking this down from the very beginning so that you can see this with me as well. So if we're going by the Elliott wave theories, we should be expecting a little bit more push down on Pepe to come back below the the low price of the A wave in order for us to confirm that C wave. So if I take all of this from the charts, I delete everything from the charts, and now let's look at it again. Now that we have the knowledge of the Elliott waves, if we look at this now, we are looking for one more wave within here, and before an impulsive wave should start, the corrective wave should be finished already. So now I'm going to point out once again, that's going to be A, B, and now we're looking for that C wave. So let's look at potential levels where that C wave could come to find support, and where the correction could bottom out, and where we could start seeing another impulse from. If I take the Fibonacci retracement tool and I measure the last wave that happened, I can see that we have a 0.618 Fibonacci retracement level right around where we got the previous low of where the A wave was. So we have a swing low here, which also means that's the liquidity zone. We have a swing low there, and we also have the 0.618 Fibonacci retracement level and confluence right there. And if I look onto the monthly charts, I can also spot a monthly level very close to that area, which is right about there. That's gonna be a high time frame level. So looking at all of this together, I would be looking for something of this kind of nature on PEPE in order to be able to stack up some coins or position for a swing trade to capitalize on the last impulsive move that may be coming. So you see this resistance trend line where PEPE currently is at the moment. I typically would anticipate a rejection around this area for it to revert back all the way back to the lows and come back to break below this low in order to put in that C wave of the ABC correction. And then from here, where we start seeing signs of a support around this area, probably if we get a break below the liquidity low and the 0.618 Fibonacci level, and then we start seeing a reclaim back above, that is going to be a sign to start loading up for a potential final wave coming in at PEPE. So the conclusion of this is around this 0.00001445 price points on PEPE is going to be a good buy zone if you're currently looking to get into a high probability impulse on a meme coin. So that's what I have for you guys right now.